So where do we get the percentage return? Well, one way you can get a percentage return is you can invest, right? Or you can trade. So there are two ways. One way is you can, invest your way to becoming rich. The other way is you can trade your way to become rich. So a lot of people have many misconceptions as to what is investing and what is trading. Today, I want to tell you that a lot of you, actually, what you think is investing is actually trading. And here are the difference. So investing, usually, the time period is long term. That's why people say invest long term. Like, for example, one example, let me give you a very relatable example. If you go to university, right? If you send your children to school or private school or university, that is a form of investing as well. Do you see the profit or the return or the benefit immediately? You may not. You may see the profit or the benefit after 3 to 5 years, right? Same thing with investing. You buy a property, initially that location may be not that much populated, not that many development, but you can see the future. So you buy it and you hold it for 3 to 5 years. 3 to 5 years later, right, the development came, the population came, and there are more demand for property at that area, and the prices of that property increase. So that is what we call long-term investing. Now, what is trading? Trading is what we call short-term, right? Short-term is like, it could be days to it could be weeks. Now, a lot of people say, hey, Ming Teck, is Bitcoin good to invest in? Personally, I feel that Bitcoin is like gambling. But if you insist to, make money from Bitcoin, which is possible, then you must trade. That means you must buy and sell. Now, there's a big difference. Later, I'll talk about that. Investing, you actually can make money even if you do not sell. Trading, you must sell in order to profit. And investing, we usually go in for big profit. We don't go in for, 10%, 20%. We go in for double, right? Or, big percentage gain. Trading, we only want to make small profit, but we want to make the profit frequently. So from there also you can see, investing, you do one-time job, you get a lot of money. Trading, you have to do many times of work and you get small profit. But you see the profit faster. Investing, it may take longer for you to see the profit. So most people, actually the best way is to invest because number one, you have less risk, which I'll explain later. It's more easy to make money when you invest versus trading. It's very easy to lose money when you trade, and you just do one-time work, right? Versus trading, you have to do so much work, and it's very stressful when you trade and invest, right? Invest is easier. And invest, mainly we look at value, and trading, we look at we look at the price and the price chart. Now, what do we mean by value? Let's talk about this value, right? Stocks. What is the thing that gives a stock a value? What makes, for example, we may say the thing that make Nestle valuable as a business is what? It's because of the branding, that is a value, right? It is because of the earning, right? Mainly it's because of the earning. Why do you want to own businesses? You want to own businesses because we want to make, we want to benefit. When the business make money, we want to share part of the profit, right? That's why we want to invest in businesses. So if you invest in stock, the value will be mainly driven by what is the business doing, the branding, the business development, the earnings of the business, the future of the business. So those are the value of a business. But if we are doing trading, we only look at the price chart. Oh, what is the price of this stock in the past, right? Where do we think it will go? So we only focus on price. Nothing wrong with that. You could still make money, but there is a big difference, right? And here's an interesting thing. When you invest, even if you do not sell, you can still make money. But when you trade, you must sell in order to profit. If you don't sell, you cannot make money, right? And when you invest, we mainly invest in productive asset. And when you trade, you mainly trade in non-productive asset. And what are the differences? Let me show you. And after I show you this, you will see why investing, it's easier to make money when you invest versus when you trade. So type of investment. What are the type of investments out there? Well, stocks is one type. You can buy Nestle and you own the stock, and that is called investing. Or, very hot recently, which is not recommended here, is Bitcoin, right? A lot of people say we invest in Bitcoin, which for me is no, you're not investing in Bitcoin, you're betting. And gold, a lot of people say, oh, gold is a good investment, which I don't think so, which is something that I'll tell you why later. And we have, people that own REITs, real estate investment trust, or let's say investment property. You buy a shop house, right? Or in the extreme case, you own the whole pavilion, right? And or you buy currency, you buy US dollar and ringgit drop and you make money, right? And or you can buy a farm, right? You buy a farm, animal, produce, milk, produce eggs, or you buy an oil palm plantation. They produce oil palm, you harvest it and you sell it and you can make money. Or you can buy rare watches and you invest. If the price go up, you make money. Now, do you notice, is there a difference between this kind of asset? Let me ask you a question. Is there a difference between this kind of assets that you see? Yes or no? Do you see the big difference between them? There's one very, very big difference, which will make one class of this investment safe investment and make the other class of this investment quite speculative and a little bit like gambling. Do you know what is the biggest difference? The biggest difference is this. On the left-hand side, okay, hold on. On the left-hand side, after the line, the left-hand side to the line, you can see Nestle, Pavilion, and Farm. These are what we call productive asset. On the right-hand side, we can see gold, we can see Bitcoin, we can see currency, we can see rare watch. These are what we call non-productive asset. Now, productive asset means what? The name tells you they produce something. Nestle produce what? Produce Milola, right? They give value to society by, making people having a good breakfast, providing food that is fast and nice that we like and easy to consume, right? Pavilion, right? Provide a space for businesses to do business. Farm, produce things that we consume. So they produce all these things, right? All this value that can be turned into cash flow. Nestle generate cash and income. Pavilion generate cash and income from rental. Oil palm plantation generate cash and income from their fruits. On the other hand, gold. You take 100 kg of gold, you put in a safe box, come out 100 years later, maybe you have 99.999 kg of gold due to oxidation, right? Or Bitcoin, right? Bitcoin, you buy in the future, all you can do is hope that a lot of people will like to use Bitcoin and the price go up. But that is a hope investing. That is not a good strategy. On the left-hand side, whether the price go up, whether people want to buy it from you at a higher price or not, doesn't matter. You will still get the income, right? You just imagine, as long as you pay a fixed price to buy this business, and as long as they continue to make money, don't you think it's only a matter of time before you get back the money that you put into these businesses? As long as they are not losing money, it's only a matter of time before you break even. Make sense to you, right? And the only question is, how much are you making? Not will you make money, but only how much. So the most important thing is you must buy good asset at quality price. And the good asset are the left kind of asset, the one that produce cash flow, income. The one on the right, you must hope and you must pray that the price go up. Otherwise, you cannot make money. So which one would you rather invest, the left-hand side or the right-hand side? Right? Rare watch also. What if people don't like this fashion anymore? Let the price go down and you lose money, right? So it's very uncertain whether you make money or not buying the right-hand side. It's something like gambling. But on the left-hand side, even if the price don't go up, nobody want to buy it from you at a higher price, you can still make money, not only maybe after a while break even and continue to make more profit. So logically, right, the left-hand side, the productive asset is what you should invest in. Make sense to you? So productive asset produce income even if you do not sell. In other words, if you hold long enough, the income could more than cover what you paid for the investment. Right? So which kind of asset do you want to own? Of course, it is productive asset because they are safer. Makes sense to you? And just now we say, you want to multiply your money 10 times, you want to multiply it at where? some place where it's all or nothing, or some place that is safe. Some place that is safe, right?